This is the type of process I take before evaluating growth stocks. I understand that there's probably great stories and great contracts behind this company that I'm unaware of. Today we are going to talk about a stock that is either absolutely loved or absolutely hated. That is going to be none other than Lucid. Lucid Motors has recently been introduced to the Nasdaq 100, and it has a pretty hefty market cap on it, to be completely honest. So we're going to dive into Lucid today to see if this is a buy or get the hell away. By the way, if you are new to the channel, you know what to do. Like, subscribe, smash that thumbs up, and let's get into Lucid Group. First, let's just start out with the stock price. The 52-week high is $64.86. The 52-week low is $9.94, currently trading at $40 a share. There is no in-between on this stock. Either you're a massive bull or massive bear. I really don't know many people that are neutral on this company, but maybe there are some out there. Even just going through the brief articles, we can see that some people are investing heavily. Some people believe Lucid Motors are going to surpass Tesla. And we also have some SEC concerns on the table. So as an investor, it is our job to figure out if this stock is a buy or a sell. With companies like Lucid Motors, I highly recommend taking a look at how they are valued to their peers, and this is going to be a good indicator of kind of where to start. So right now, Lucid Motors has a $67 billion market cap. It's actually approaching Ford's and GM's market cap. So that is pretty interesting to see, considering, as we can see down here, they have only 2,000 employees, while Ford and GM almost have about 75 to 80 times the amount of employees that Lucid Motors has. The value of Lucid Motors is approaching Ford and GM. So they must be doing something pretty ridiculous. And even though Lucid is joining the prestigious Nasdaq 100 index, and yes, in the short term, that will increase the price as more money and more recognition is going to go to a stock. Long term, it's still going to come down to the fundamentals of the company. So let's get into the fundamentals of Lucid. So does this business model deserve such a rich valuation? Well, that's our job to figure out. Now, granted, I understand that the technology of Lucid Motors is an intangible amount that we really can't put a price on. And it's really up to the investor to decide on what risk they're willing to take on for that technology and if the company can execute so it benefits the investor. That is the risk we take on as investors, especially when it's companies that are new to the market with rich valuation. So the first thing I always look at for a company is what's their revenue and what's their revenue projection. Well, right here we can see they've done 4.3 million in revenue, and their revenue growth is minus 13%. And their net income is negative almost 2 billion, with them having 4 billion, almost 5 billion of cash on the balance sheet. This is not good at all, as it looks like their burn rate is definitely going to eat through their cash position, and that tells me that there's probably going to be more shares put on the market sometime in the near future. Does that mean that this is a crappy stock? No, it does not. But what I have to figure out at this point is what kind of business can they do over the next 2 years, as I'm concerned about their cash position. So I need to know that this company can perform over the next 2 years, as I do think putting more shares on the market is going to be highly probable, considering the burn rate and entering in a market that is extremely competitive. You have to pay up to get in front of buyers. So when I look at recent news in Lucid Motors, we can see that there is definitely a demand building for their cars, as they have 17,000 reservations. And Lucid also confirmed it has 20,000 vehicles in production, target for next year, but said hurdles remain for achieving those plans. This article was on November 15th, and in recent news, it looks like they do have enough production to meet these quotas. So it seems that they are going to deliver on these promises. So we know they have 17 roughly 17,000 reservations that are going to do 1.3 billion. And for next year, it looks like they expect to do 20,000 Lucid Air sedans, generating more than 2.2 billion in revenue. So when we consider that, absolutely $64 billion valuation is extremely rich for this company. Just so we can compare what 20,000 sedans through a year look like, let's see what Ford did last quarter. Ford delivered 401,000 vehicles during the third quarter. Year over year, Ford has delivered about 1.4 million vehicles in the US, which is down about 7% compared to 2020, which would make sense considering the events that have taken place. So now that I have an understanding of what to expect for industry and how much they could possibly grow if they take a market share away from some of the competitors, I need to understand what am I willing to pay for this company. The first thing I'm going to pay attention to on their quarterly report is going to be their cash. Either they have cash or they're going to have to dump shares, which means as a shareholder, I am probably going to be hurt unless if they are absolutely ramping up numbers and exceeding expectations. Then it'll work itself out. But because there's 4 billion in cash and it seems like they are burning a significant amount, and this is a growth company, so they are going to be spending to grow, and it won't be for a while before you see profitability. So you're taking on a lot of risk with that. So I have to figure out what is a good valuation. Well, if they stick true to their numbers and they can do 2.2 billion in revenue, I am willing to pay between a 25 to 30 billion dollar market cap at a high end for this company. And that would put them basically at half of what they are right now, which would be between $17 to $22 is probably the price target I personally would be looking at to enter a position in Lucid Motors. Guys, this is my opinion only, so if you're long Lucid or if you're short Lucid, this is just my opinion, okay? I think that it is extremely overvalued, and I even think that a $20 billion market cap is taking on a ton of risk. But with what they're doing and how they've been delivering on their word and the technology that they have of possibly being disruptive to the space, I do think it does demand a higher valuation. Hopefully you guys enjoyed my dive into Lucid Motors today, as this company does look like it has a bright future, and I could absolutely be wrong. But personally, that is the risk I am willing to take on for that price point per share. This is the type of process I take before evaluating growth stocks. I understand that there's probably great stories and great contracts behind this company that I'm unaware of. But when I look at a company, you have to compare it to its peers, the fundamentals, and the projection of growth. And in my opinion, I think a $66 billion valuation is very risky. And I think the valuation is probably going to go up due to the fact it is entering the Nasdaq 100 index, and that is going to cause a lot of liquidity to flush to the stock. Unfortunately, I may miss on this one, but if it does get down to that price point and the fundamentals look good and they're not burning too much cash, I will be interested in the stock. As always, guys, I appreciate your time. Thank you so much for spending it with me. Consider smashing that thumbs up and subscribe button, and we will see you next time, investors. Peace.